Welcome to the Capital Spreads weekly update. Today is Wednesday the 7th of January 2012, and firstly I'd like to wish all our viewers a happy new year, as this is the first commentary I've done since the beginning of 2012. And getting right into it, we're looking at the current situation. The market seems to have held up so far, and it's only the second week of January. Now this has largely been off the back of quite good corporate earnings out of the US. Not only have we had most companies announce quite good results, we had a further boost from the non-farm payroll that came out on Friday, which showed that the US jobless rate has now fallen to 8.5%, the best it has been for almost 3 years. However, when you contrast that with how Europe's behaving, you can see that there's almost a two-tier recovery going on at the moment. Europe continues to struggle and languish at the moment, and there seems to be no clear direction or a picture of how this will be resolved. The US, on the other hand, seems to have finally caught a bit of momentum and seems to be in a recovery mode at the moment. You also have to keep an eye on Asia, which despite the fact that it is booming, seems to be having its own problems, largely which seem to be very high inflation, as well as the fact that they seem to be quite dependent to quite a great extent, I should say, on the European story. So every time the Europe seems to be having problems, Asia seems to be following. In terms of the current situation and looking at FTSE as it currently stands, it's trading around 5650. It's down about 25 points on the day or so. It seems to have broken away from the 5500 pivotal level. However, the 5500 seems to be quite a difficult level to break from, both on the upside and downside, and maintain a trend in the direction. Furthermore than that, we also seem to see the FTSE now sitting above its 200-day moving average as well. Now that seems to be providing further support for the FTSE. In the short term, you're looking at possible range trading. The FTSE seems to be finding quite strong resistance, both around 5650 and then up around 5800, while on the downside you're looking at support around 5250 and then on 5000. Looking at the longer term picture, the FTSE doesn't seem to have any clear direction in which way it wants to go. If anything, playing the extremities certainly seems to be the strategy at the moment. The euro too continues to be quite topical for obvious reasons. And now the euro dollar seems to have been in a downtrend since October 2011, and I have a chart to show you regarding the euro. As can be seen, the euro continues to trend downwards, with many people looking at support firstly around 126.50, although many commentators are openly talking about 125.00 being the key support level. Many bounces at the moment seem to continue to be selling opportunities, and given the fact that there seems to be no clear direction as to how Europe will solve its problems, the trend continues to remain downwards, and there seems to be no reason to be buying the euro at the moment. Furthermore, if you look at euro yen, the euro yen seems to have hit a 10-year low, and again that shows no direction of changing either. Every time you think you've hit a bottom in euro yen, it goes even further. At the moment, if you believe the trend ninja friend and markets will continue in the direction they are at the moment, you would certainly continue to be sellers of both the euro dollar as well as euro yen. In terms of the week going forward, we have a number of key figures of the next few days or so, which will certainly help move the markets around and provide a bit of volatility into the markets. We have key interest rate decisions, both from the Bank of England as well as the European Central Bank, out tomorrow. Now, neither of those are actually expected to change their stances on rates, at least for the next 6 months or so, and certainly not tomorrow. However, any minutes coming out will certainly provide further insights as to how they view the recovery into 2012, although many people aren't being very optimistic. We also have US retail sales coming out later tomorrow. Again, a good strong figure from the US, which add further impetus and boost to the belief that the US seems to be recovering. While on Friday we have the UK CPI, and going into next week we have the UK PPI on Friday, and we have the UK CPI coming on Tuesday next week. Now again, inflation has been a very high value in this country, and that certainly doesn't look like it's going to be turning around anytime soon. And another high figure will certainly add a lot more pressure in terms of what the UK can do going forward. In terms of client activity, many of our clients seem to have gone short the indices at the moment, believing that the rally we had going into the new year might be possibly been overdone, considering the fact that nothing has been resolved in Europe. They continue to hold on to long positions in both gold and silver, and most recently have gone long both the Euro Swiss as well as Sterling Swiss. In terms of the theme of the week, I would say the theme of the week would be twofold. Firstly is the relatively robust earnings and figures that we continue to have at the US, which shows that gradually the world's biggest economy seems to be pulling itself out of recession. At the same time, we also have a languishing Europe situation, and that doesn't seem to show any signs of clarity or any improvement. And it will certainly be interesting to see how the beginning of the first quarter of 2012 will be going forward, especially considering that you have quite a lot of Eurozone debt that needs to be rolled over, and the high yields that many of these countries are now being punished with. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.